So, Simon, thank you so much
Absolutely.
for being here for the second episode of The Millionaire's Mic. So, thank you so much.
Excited to be on it. Thank you for the opportunity, and
of course,
glad to have you here in Tampa.
Of course, yeah. Thanks for having us. For those of you guys watching, we're at Simon's incredible Airbnb here in Tampa. We're gonna have some B-roll footage showing like how awesome this place is, and just we're gonna dive into how you even managed to get this and ton of other awesome stuff. So yeah.
Cool. Excited to dive into it.
Yeah, that's going to be very fun. So I'm going to go straight into it. So first, can you introduce yourself?
Sure, guys. I'm Simon Lerner, 23 years old right now. Brief little, I guess, summary of me for those of you who are not familiar with who I am. Was born in Russia, actually, originally. Parents brought me to, my mom brought me to America when I was 13 to pursue higher education in college, because education for a Russian family that grew up in a Soviet Union was the only path to freedom back then, right? So
for sure,
my parents envisioned me going to school in America, which I did. Finished middle school and high school in America, went to college, and ended up dropping out freshman year of school and college to pretty much start a business and continue with my own business endeavors. Now, I went originally for mechanical engineering to a school in New York, and then 6 months into it, realized I was doing it for my parents, not for myself, wasn't enjoying it, switched to business, and then realized I was learning more driving to and from school, listening to business podcasts like this one, than I did from a college professor who's never started a business. Mm-hmm. Then I dropped out, but I realized that, hey, I still need to continue educating myself because education is important.
For sure.
I just need to change the source of where I'm getting my education. So that's when I discovered entrepreneurship and personal development and started going to business events and masterminds. And that's pretty much where it started. And then, 4 and a half years now since then, here we are. So
that's awesome.
Insane.
And speaking of that you quickly realize that you need to keep improving and learning new things, because school, of course, is not enough, especially when, as you said, I had the same entrepreneurship teacher that teach you about entrepreneurship but never build a company. It's like what the fuck. And so what made you think that, hey, entrepreneurship is the way I need to do to build my life, and which kind of business you were first interested in?
For sure. So that's a deep question. There's many parts to digest. So number one, school, in my opinion, is great for technical skills that you can't learn by trial and error. Mm-hmm. Like, for example, you can't learn how to be a pilot by trial and error. Oh, I crashed a few planes.
Oops.
I crashed a few planes. Oops. Now I learn what not to do. Same with like surgeries. Oops, I killed, 17 people. Now I can be a surgeon, right? Yeah. But business, you learn by doing business and making mistakes and losing customers and improving. And that's the difference in the education approach, because both are taught the same way in school, yet they're completely different subject matters, right? If it's accounting, law, engineering, there's very little trial and error. Therefore, it needs to be taught one way. But with business, everything is trial and error. There's no defined, path to it. There's all these creative ways, especially in 2023, when there's social media and there's 101 ways to get customers, right? It's just completely different. Mm-hmm. When I was in school, I already was trading. So that's what really started for me. I started getting interested in the stock market senior year of high school.
Yeah.
Mm-hmm.
And that passion transisted throughout freshman year of college. I was trading in class,
Classic.
And are we talking like Robinhood? Like you pulled out?
Well, I started with Robinhood, then I transitioned over to more advanced platforms like TD Ameritrade, where I could actually do charting, and was really all I spent in my free time doing was looking at stocks and charts, because that was really interesting to me. I'm like, listen, people on the computer can make more money than the college professor.
For sure.
I didn't prove it to myself back then yet that it's true, right? Because I was making all this money, but I was like, let me give it a shot. Maybe it turns out to be true that can be the lifestyle I can achieve. So I remember it vividly when I ended up dropping out was because I was in my economics class when I already switched from engineering to a business degree. Mm-hmm. And we were learning about the markets, Dow Jones Industrial Average, the different market cycles. And I was trading in that class. And I remember after class to see my professor. I was like, hey, I'm really fascinated with the lecture you had today. I'm actually personally investing in the stock market. I want to become better at it. I'm trading Tesla right now. That was when Tesla was $200 pre-split,
that was crazy.
Thousands of percents ago. And I was like, could you give me like some advice on this? Should I buy more shares of Tesla? Should I like sell it? Is there any other stocks you recommend? And he was like, Simon, I appreciate your enthusiasm, but I can't give you any tips or advice on the stock market. I'm personally not invested in the stock market. My wife doesn't let me trade and invest. She thinks it's gambling.
Oh, God.
So then I was like, wait a second. Why am I accumulating debt to be in school to learn from a guy who makes $40K to $60K a year, teaching about the stock market, yet he's never invested in a stock before because his wife doesn't let him? Where's the logic in that?
Right.
So I was like, let me change the input of where I'm getting my information. Dropped out, and then I seeked mentorship from people who actually had results in that particular field. And that's been my common theme with like anything I want to learn, whether it's real estate, whether it's taxes, whether it's trading. I go to people who have results in that particular industry. And that's the one biggest thing people that don't that start out don't really understand, is that it really matters who you take advice from. And you need to make sure that those people that you are learning from actually have walked the walk and talk.
Yeah.
They
know what they're doing.
Exactly.
They've been there, right?
Yeah. And when you had dropped out of college, did you already have like were you already making good money on the stock market where you were like, I'll be able to keep myself afloat?
No, it was still at that break-even phase, making a little bit of money. I was past that phase of like just consistently losing money and not understanding what the heck I was doing, but I wasn't making like life-changing money. But I also had the benefit of the fact that I had very low expenses because I was living at home. I was, commuting to school. So and I have, pretty much a roof over my head and a place to sleep that I didn't have to worry about. And that gave me that security that, hey, I can take the next 6 to 12 months, not have to worry about a roof over my head, which, I'm sure a lot of people do, but also for some, it's a privilege. I totally understand that. Not all, 19-year-olds can be like, oh, parents are not going to let me stay at home, and try to figure it out for a year. So I definitely had the upper hand on that, but, that's where...
Sure. And talking about your style of trading, the big cliche of trading is like you have like 6-7 screens and you from like 7 a.m. to 5 p.m. From what I saw on the social media, you're not doing that, right? You're doing an option, if I'm
yes. Right now I'm mainly an option scalper, but that's not what I always was, right? I feel like as humans, we evolve, right?
Yeah.
Our habits change, our patterns change, our environment changes, and if we're staying stagnant, we're not growing. So change is necessary. And in the stock market, my evolution was, I started off with looking into first equities, just normal shares, right, to figure it out because it was lower risk. But then I discovered penny stocks. I was like, oh, I can make much more money.
For sure.
Then I realized that it wasn't focused on like how actual trading should be done. It was more news manipulation, understanding news releases, because all the penny stocks that are with a very low market cap, they're moved by news and catalysts opposed to technicals and fundamentals.
Yeah.
Right? Because tomorrow you can have a biotech stock report, hey, this new drug is doing this, or, and you're going to have crazy price fluctuations, right? So you cannot swing trade those stocks. It's very hard to trade those because your job now shifts. You're more of a news analyst, always looking like, how is this news going to affect the stock versus understanding charts and fundamentals.
Interesting.
And then from that, I transitioned to options. And obviously, with options, there's more risk. So learning to manage that and other things that tie into options with time decay and a whole, it's a whole other game. But it was necessary to go through those phases because a lot of people dive into it and they're like, oh, I'm going to start trading options. I'm like, but have you made money trading normal stocks? They're like, no. I'm like, well, it's the same thing, but with more advanced stuff on top of it. So if you're not, good at the previous level, why are you trying to jump to level 10 before you complete level 2?
Yeah. What would you, I guess, like to someone who doesn't have your like breadth of knowledge when it comes to the stock market, like if you had to tell someone who's like, hey, Simon, I'm really interested in like investing in stocks, like where would you say to start? What should you look for?
Well, it's a difference between whether you want to just invest in stocks and be a passive long-term investor versus you want to actually be participating in the markets on a daily basis as a trader. Those are two different things. Okay. So if you know nothing about investing and you want to invest long-term, what's worked for me has just been investing in companies and products and services that I actually use on a daily basis. Because you as the user will know the fluctuations and the changes that are happening. For example, what do I mean by that? Let's say I use an iPhone as my phone. I'll invest in Apple stock. I eat Chipotle every day for lunch. I'll buy Chipotle stock. Something like that. And the reason for that, a lot of people do very well with that is because they have an edge on the big Wall Street person who just looks at the numbers on paper. Because if you were in Chipotle back in like 2012, 2013 when they opened, it was like not existent. But then in 2015, you walk in, there's a 25-person line. You're like, shit, everyone's catching on. Chipotle is like the main new thing. I like it. Let me invest some money into it. And stock went from like $200 to $1,500, right? So that's been kind of my approach in the very beginning to investing. If you just want to invest long term and you want to allocate your money into it, but you don't have the know-how and you don't want to dive into looking at earnings reports and 8Ks and 8Qs and really diving into fundamentals and looking at profit statements and looking at all that. That's like the simplest way to invest in products that you actually use, right?
Yeah, for sure. And that you understand.
Yeah. For trading, I would start off with paper trading. So it's pretty much trading the real markets with a fake account so you don't have any risk.
Yeah.
Now there's two sides to that coin. The good side of it is you get to learn, how to enter a position, how to sell a position, what button does what on the screen. Because you don't want to go in there and be like, oh, I clicked the wrong button. Oops. I lost $3,000.
Yeah.
Right? But also, obviously, with everything that has a pro to it, there's a con to it. The con with paper trading is that you don't have that emotional attachment to the trading, which is very necessary to have when you're trading with real money. Correct. Because in a fake account, you can just put, I'm trading $5,000. And guess what? If you lose $2,000, you just click reset and you're back at $5,000. You can make more and more mistakes. But then when you transition from a fake account to real money, you don't have that button anymore. Nope. The magic wipeout reset button.
You don't have.
So then when you are down money, you're like, oh shit, this is real now. This is my money and I can't do anything about it. How do I fix this? So there's that emotional disconnect where, paper trading, in my opinion, should be done for a short period of time to get a hang of things, but then transition to real money as fast as possible to also connect the understanding of how to use a platform with your emotional aspect. Yeah. Because that's really what's going to drive you. You might be doing well with fake paper money, but the moment you try to do the same thing with real account, your emotions start kicking in.
Yeah, and some people
that's the
get
hardest to master.
Yeah,
of course. Yeah. Wow, that's fascinating. I didn't even know there was like so many different aspects to it. So.
And did you use this knowledge when like in 2000, let's say 1920, the Bitcoin cryptos explode? Did you use this knowledge to go on the cryptos and to trade?
Sure. With cryptos, I never really traded. I had long-term positions. I was in the Bitcoin way under 10K,
That's good.
So, I had positions from about 6 to 14K on Bitcoin that, I offloaded some, but I'm still holding actually certain positions that are just long-term holds that I dollar cost average into every single month on autopilot, whether the price is 68,000 or 18,000 I'm buying every month. So that's something that's long term, but that's a conversation for
oh yeah, no.
we can jam.
Definitely that was my question, because I saw a lot of people that used to trade on daily basis on the stock market, on the forex, and they were like, you know what, like crypto could be good because of course like it's like, I would say the forex, but on drugs.
Yeah,
everything is harder. Like you can go up super fast, but you can go down very faster. So that's why I was asking you if you use that. But yeah, no, it's more like
a lot of people need to understand you can make money in anything. You can do real estate, you can short, you can long, you can buy, crypto, forex, stocks, options, this, that, derivatives, futures. There's money in everything. It just
you just have to understand.
It's not even about that. It's about just pick your one thing and stick with it. Stop being a hopper between, a shiny object syndrome. Oh, this month is crypto, and next month it's NFTs. The month after that it's something else. That's how people never end up building long-term wealth, because they're always hopping between the next hype and trend.
No, for sure.
And also, isn't it true that it's like once it's kind of hype, like once people are talking about it, that's kind of where it's probably going to start to drop at that point, right? Yeah.
It's too late.
It's too late.
When everybody and their grandma at Thanksgiving dinner is like, grandson, have you bought this NFT for $3 million?
It's
So,
over.
yeah,
Like it's done.
when the grandpa and the grandma are talking about NFTs, you're like, okay, like I gotta get out of
we
that.
have a saying in French. It's like when your baker talk about Bitcoin, you have to sell it because it's too late.
Yeah.
And to come back about trading, when was your haha moment? Like okay, I know how to master and kind of I know nothing can happen to me because I will always know how to understand this market and make money.
That was probably when I just moved to Tampa from New York, so I was 20, about to turn 21, and I did pretty well with trading. It was a combination of the markets doing their wonders in 2020, 2021
2021
with the bull run, but also solidifying really your knowledge over time and experience. It wasn't like, hey, you're profitable 1 month, you're losing money next month.
Mm-hmm.
It was like a consistent streak where even despite having taken big losses, you're still green on the month. So like in the big picture, you're not green.
Yeah.
Right. And that really came down to like very minor tweaks, because there's very minor things that separate like break-even traders from really profitable traders. And that's just like your risk to reward ratios and risk management. Just tightening your risk management by like 2-3%, right? And having a better entries and exits, like being more selective with how you trade and what you trade, makes the world of a difference.
Yeah, it's better to have like small wins than try to get the big win, but then you end up with a big loss.
Well, and I think also like what you said, it's like if you've structured yourself well enough that even if it's a huge loss, you're going to still come out on top because you've strategically kind of diversified in that sense, right?
That, and I guess huge loss they happen, but minimizing big losses is the biggest thing also, because as a trader, there's only like 3 ideal outcomes that you want to have, right? You either want to have a big win, a small win, or a small loss. You never really want to take those big losses, because you got to realize also that you need to do double the work to work your way back out from a loss. What I mean by that is a lot of people don't understand that. Let's say you're at $100 on your account and you lose 50%, right? So you're now at 50. To go from 50 back to 100, people are like, oh, I just need to gain the 50% back. I'm like, no, you got to gain 100% now. So it's like you got to do double the work just to get back to zero, right? So that's why taking big losses in trading is, a big no-no, right? You want to always minimize the losses. So.
Yeah. So I guess obviously you've become kind of like a stock novice, or not novice, but like an expert, I guess, in this space. But how did you then transition from that to real estate, and why did you transition?
So it was a combination of a couple of things. The biggest one, from the perspective of money that made sense, it was like, hey, how do I mitigate taxes? It was like you buy real estate, right? Learning through how long-term wealth is built, and 90% of people who are millionaires, they build their wealth through real estate. And I'm like, okay, I've saved up a good chunk of money. I want to deploy it somewhere else, because for me it was always like, I want to have a active income that's more riskier, where you take a lot of risk, which for me it's stock trading. But then I want to put that money into like more of a safer, longer term investment, because you don't always want to work for your money, but also you don't want that stress at night that, I have $1 million in a crypto and then tomorrow it's 300 grand. Right?
Yeah.
Real estate is much slower than any stock or crypto in general, but it's also less volatile. You're not going to see a house drop 30% overnight.
No,
right.
So that's what kind of led me towards real estate. And I was like, okay, let me make money with a more riskier thing with day trading, and then put it into real estate that will not only offset a lot of the taxes that you have to pay on the trading gains because it's active income, but also it will produce you cash flow, and it'll grow in value over time, but much more slowly, 3, 4, 5% a year.
Right. And
I'm okay with that because it's also bigger numbers.
Yeah,
and then also you can deploy much more leverage in real estate. So you can buy a $1 million house, with $100,000 in crypto. You cannot buy, $1 million worth of crypto with $100K. You need to put, maybe 50, 60%.
Even with stocks.
Yeah. If you're, getting leverage. So there's much more leverage you can deploy in real estate that is less risky. So that was from a financial aspect. From a personal aspect, real estate just really gravitated me because from a young age, I was always the kid that was like playing with Legos, and like that was always my creative outlet.
Yeah.
But also it was, as I said, the creative outlet for me, aside from trading all my other online businesses. Because in online businesses, everything's digital, right? You're and all you do is you just track numbers on a dashboard for the most part.
Yeah, that's it.
You cannot touch it, you cannot smell it, you cannot feel it, you cannot see progress. It's yes, you see progress as in like you have more views, more clicks, more
you can touch it,
more conversions, but it's not real, right? I wanted something that's real. That today you wake up, it's one thing, and tomorrow you go to a project and it's completely different, and you can physically measure change. So that's why I got into real estate and real estate development and Airbnb, because I can see today, hey, I have a old property, then you renovate it and it's like, oh, it looks brand new. Now you furnish it, right? So that gives me that creative aspect of it. And it also makes sense financially. So it's like a win-win.
Sure. So with real estate, so obviously you're going, like, are all of your properties Airbnbs?
Yeah, that's kind of my niche now. Okay. That's what I specialize in. And there's much more potential for profits with Airbnbs, because now you're not just in a traditional rental business, you're in a hospitality business as well.
Right. Yeah.
Right. And so that's that. Number two is it allows you for more tax benefits. So you can do something called a cost segregation, accelerated depreciation study. So you can depreciate a lot of more things against your income much more quickly. Obviously, I'm not a CPA, consult your professional, but ask him or her about a cost segregation study you can do in your properties. And that's something that can be very useful for people that are deciding between a long-term rental or a short-term rental. They can talk to their CPA about it and see, based on their situation, what would make more sense for them, right?
Right. Yeah, I was wondering why you kind of had opted for more Airbnb versus having like a tenant type property. Yeah. But yeah, that makes sense.
Yeah, so one thing is obviously the taxing. The other thing is I know for a fact that Airbnb properties in general have much less wear and tear than long-term rentals. And you'd think like, oh, Simon, you're crazy. People
think it'd be the
throw parties. They do, like crazy stuff in Airbnbs. You hear all those horror stories, but you also got to realize that you rent a house to, let's say, a family, like a regular house. How often are they going to have cleaners in there? Maybe like once every 3 months, if that, right? If it's ever going to get clean. How often are they cooking or doing laundry? They're cooking 4 times a day: breakfast, lunch, dinner, snacks, whatever. They're washing, their clothes, 7 times a day. With Airbnbs, people are pretty much just using it as a place to, crash for a night, and then they're exploring the city, going to the beach, doing whatever with their friends. Might occasionally have like a barbecue or get together, but the property gets a deep clean, for 4 or 5 hours every single time a guest checks out, and they make sure nothing gets to the point of no return, with appliances, with the floors, with the windows and everything is sparkling clean shape. We're sitting right now, and you guys can probably be a testament of
it's
how clean this property looks, right? So.
Yeah. And you've been doing kind of like a lot of almost like ground up development too with your Airbnbs, right?
Yeah.
Like not buying something that's kind of in pristine condition.
Yeah, I've done both. For me, the development aspect is super interesting, because with Airbnbs in the area we were in, what really determines how much money you can charge night is how many people you can sleep.
Right.
The more people you can sleep, generally, the more money you can make. But in this market, you're never really going to find more than like a 4-bedroom property, just because for a normal family who doesn't do Airbnb, nobody really needs more than 4 bedrooms.
Yeah.
Right. So with me, I was like, would I rather have 1 8-bedroom property or 2 4-bedroom properties at the same price? I'm like, I'd probably just have 1 8-bedroom property, but they don't exist, right? Because nobody in their right mind needs an 8-bedroom property to raise a family. Only like an Airbnb or a hospitality person would. So I was like, if they don't exist, let me create it. So that's why I've been building a lot of properties from scratch for Airbnb, because I can custom design them for the purpose of Airbnb them. Right?
Yeah.
So, that's been one trick that we've implemented. If you have the resource to do so, I highly recommend it. And you can stand out in your market where, let's say, every Airbnb property is a 4 or 5-bedroom max, and you have a 9-10 bedroom home. It's like, wow, you can charge.
You're unique.
Yeah, you can be unique. You are in a lane of your own, because nobody's competing with you, because they just nobody has what you have.
Right? That's very interesting. And I think I know the answer of the next question, but do you plan to go in all those cities, or you want to stay in Tampa for now?
For now, I'm really fascinated with how Florida's been growing. I want to stay in Florida for now, but I'm honestly not sure where things are going to go in the near future.
You never know.
I never really planned things more than 6 months in advance because I know that 3 years ago, a lot of people got proven wrong with COVID when that happened.
You're very
they had plans. Oh, I'm going to go on this vacation. I'm going to marry this person. I'm going to move there, or I'm going to do this and that, and then something so unpredictable happens that all plans need to change. So that's why I'm not a big fan of planning things, whatever it may be, more than 6 months in advance. Like all my goals, everything is 6 months in advance. I have visions and aspirations, obviously long term, but all the goals I work towards, nothing is more than 6 months out because so many variables just change.
So, for example, when you say, "Hey, I want to get a new house for Airbnb," you want to get it before the 6 month period, or doesn't matter? Once you have the idea, you can execute it.
Yeah, well, right now I have an idea, so I have a piece of land I'm looking at. So within the next 6 months, I know that I want to execute on it, and we're making moves with it.
Yeah,
but I don't know what's gonna happen after that. I'm not looking into in 2027 I want to be in 51 states and have Airbnb properties everywhere. I'm not even looking there.
Yeah, all right, so, that makes sense.
Yeah. But let's say 6 months from that, when I complete this project, I may be these are the variables that changed. Now let's look into going out of states. But that's going to be 6 months from now, right?
Yeah, for sure.
Constantly having a feedback loop and reevaluating to assess where you're currently at with your progress as well. It's super important for entrepreneurs because what I've realized is a lot of people don't evaluate their progress more often, once a year. People have a New Year's resolution goal, and they're like, oh, I'm going to do this and this and this and this. They don't reflect on it or check on it or measure progress until next year. 2 days before New Year's, it's oh, did I hit those goals? No. Okay, let me set my next New Year resolution.
It's the same.
Right? So having more of a active feedback loop in your life. So reviewing stuff on a closer basis. That's why closer goals always tend to help people achieve things faster.
Yeah.
Right? Because you're evaluating the progress on a much more consistent basis.
Yeah, it's more attainable. That's very deep. I love that.
Yeah, me too.
Now that I think we talk about everything about real estate, unless you want to add something else.
No,
I want to talk about temp entrepreneurs.
For sure.
So you start this, I would say business. It's not a business, right? It's like a association.
This is a nonprofit. Actually.
It's a nonprofit, right? Where did you get this idea to start that first, and second with those person that we're going to talk about later? But what gives you this idea?
Yeah, you're going to have Joe on a podcast right back to that. So you'll get to dive into the T story with him as well. But in essence, Tampa Entrepreneurs is a nonprofit, and the whole goal right now is to bring people together locally to connect them with other business owners and entrepreneurs and build that environment for the local community. Now, the inspiration came for that through a couple of things. I've been in the events business before. I've hosted a couple of masterminds and events with my other company, Netcon. And that's how I actually met Joe and some of my other co-founders through that. Joe and Ryan I met because Ryan came to my event and Joe spoke at a couple of my events before. So that might be some questions you ask on the other podcast.
I will, for sure.
Then we decided to start something locally, but with a different idea in mind. We're like, why don't we put making money on a back burner, because we all have our successful businesses, how we make money, and do something for the greater good of the community, but also with there needs to be a why behind it. So the why behind it is not so much the monetary aspect of let's make money from events. It's more so the credibility and also just a social play for leverage, because establishing yourself in a position as a local authority is also something that can, in theory, in the end, open up a lot of doors. And for me, it has already, just by hosting 3 events in 6 months, it's opened up tons of doors. Like, for example, this podcast, it wouldn't have happened had you not come to this event. And now through this podcast, I can reach a broader audience and, keep building this way. So people need to realize that there's different businesses for different reasons. This is a nonprofit. So the goal here is not to, let's say, monetize and make money directly, but indirectly it might yield something. So in this case, it's leverage, right? Through people, your network, the doors it opens up. And so pretty much we started hosting free quarterly events for the community. The first event was actually here that we did on a 2-week notice, just as a test. We're like, well, we have this idea. We don't know if we want to put all of our energy and resources to build this. Let's do a test. And in 2 weeks, we just invited high quality people that we wanted to be there to see if there's even a need for this. And over 100 people showed up. I thought it was
170, but not 100.
Yeah, I think 105 people showed up on a 2-week notice.
We were 2 of those people.
Yeah, and then you guys have seen in 6 months what it's grown into, right? So from pretty much a house, quote unquote, get together with 100 people talking about business and networking. We went to an event 3 months later at American Social with 400 people.
Yep.
Then we just wrapped up a event October 12th at Shelter, which was a private jet hangar, 27,000 square foot space with over 700 people in attendance, right?
That was crazy.
And we 10x every factor in 6 months. We 10x. This property is 2,700 square feet. The airplane hangar is 27,000 square feet. So we 10x on many other variables.
So I'm sure you already have something planned for the future with that, and you can say, right?
We have plans. I
know that. I try. Yeah. I try. No, that for real, it's like very, very important to have that and to meet entrepreneur, because we are most of the time very lonely, Mm-hmm. And what I love in this type of event that you guys are doing, it's not to sell, we all been to the event when people are like, hey, my name is Thomas, and give the business card. And it's like so boring.
Yeah, and then the thing is, that's what I learned from events as well. And that's why we wanted to do this, because I've been to dozens of events where you buy a ticket to the event and you go sit at a conference, and then they go on stage and say, oh, motivational one-size-fits-all equation, like, you can make money doing this and this. If you want to learn, you got to buy my course or program.
Yes.
So number one, that's
been there.
That's the transactional part of when speakers are there, but also even when you're interacting with other attendees, it's all transactional.
Yeah.
It's all like, how can I extract value? Oh, you want to buy my product or service? Here's my business card. You want this or that? Here's my business card. You end up going home, you have a stack of business cards this thick, and next morning you wake up and you look at those. It's just a name, Thomas is just another name. You're like, wait, who does this guy get? Thomas? I don't remember what he looked like. Right? So toss it out. So we wanted to change that. And so people actually put an emphasis on building meaningful relationships and actually getting to know people for people before even talking about what business they're in or what product or service they sell, right? Because I don't know about you, but I want to do business with people I know for who they are. Right?
Exactly.
Same. And that makes a difference, because you first create connection and then you do business versus, like the other event. It reminds me, we all been on LinkedIn. LinkedIn, they send you like the invitation with like, hey, do you want to have a call? I'm like, dude, I don't know you. I don't want.
Yeah.
And so that's why I really love the fact that you took this problem out of the equation and be able to let entrepreneurs to connect. And it's very cool, because it's a lot of people from all the industries all over the world.
So and the thing is, it's not local anymore, because we have people driving from other states. We have people who flew from Arizona, from New York. We have people that came from Colombia and Brazil. That's
crazy.
That just wanted to come to the event. Right?
Yeah.
That's crazy.
One of the things I wanted to ask you really quick, because I know that you obviously were in New York. So why did you move to Tampa of all places? Because most people would be like, oh, you're in New York.
Yeah, well, it was right at the beginning to mid-COVID. I dropped out of school, and there was no reason to stay in a high income tax state with a bunch of snow, where everything's locked down, and I can't go get my favorite Chipotle without having a vaccine passport. So I was like, time to
Chipotle.
and go somewhere where you don't need a vaccine passport, and you have no state income tax, and you can, just be more happy overall.
From a marketing standpoint, Florida has been amazing in this period of time. Like no vaccine, low taxes, and I mean, it's not their fault, but sun every day. So it's very good, and you attract a lot of people, and it still do. So it's really, I understand. I was the same. Like I left Paris for those reasons. Like always raining, you can do anything without the passport. So I'm like, okay, I'm out, and that's why I end up in Orlando, and my life is way better than and also the taxes. We talked about that, I think, in the last podcast, but I'm sure you don't know. But we're gonna play a game. if you're an entrepreneur in France, how much taxes do you think you have to pay in percentage?
On how much money do you make? Is it
like you make 100? Let's say 100. Let's say it's flat. You make 100.
Okay, I think in France, 59%.
I wish 70.
70?
Yeah, 70. And right now it's like increasing. I think it's going to be to 75.
So if you make $1 million, you keep 250, and the government takes 750.
Yes. Wow. Unless you close from the government, you can. Like for example, the guy that owns LVMH is paying only 8%, right? But if you're like a normal person, normal entrepreneur, you pay 70 because you have like the taxes, the sales taxes.
VAT, everything.
Yeah. Like when you hire someone, you have to pay 50% of salary to the taxes. And it's not like here when you pay your taxes on the benefit that you do, and that's it, right? In France, you also have to pay a tax on your salary that you give to yourself. So it's taxes over taxes over taxes. So that's why a lot of people are running away because, like, when I talk to her, I'm like, can you believe that my president owns like 70% of my company? That makes no sense, right? Yeah. So that's a really nice game that I love to do because it's so fucked up for me that it can still exist, you know. So I think we talk about everything. I have 2 more questions for you. This one is deep. So what advice would you have for aspiring entrepreneur? That's deep.
Yeah.
That one is deep. I would say, let's see, if you're an aspiring entrepreneur, by aspiring somebody who wants to be an entrepreneur, but they don't know what to do yet.
Yeah,
right?
correct.
Or how to make money or
correct.
What to pursue. I would say, don't lock yourself into what you're going to do just yet and explore different things. Spend some time trying things and seeing what you're naturally more gravitated towards. Because a lot of people are like, oh, I can make money with marketing agency, and they start a marketing agency and then they build it, and then they realize, I hate interacting with clients and dealing with people. I don't like working with people. I want to be alone. It's great money, but I hate it.
Yeah.
And then, they realize maybe trading would have been better for them because it's just them, the charts, and their skill, and they don't have to deal with refunds, clients,
they can do themselves.
Invoices, chargebacks, client fulfillment, all that stuff. They can just make money on the screen, right?
Yeah.
So having self-awareness is super important, and knowing what you gravitate towards naturally. All of us have predispositions towards a couple of things we're good at. Some people are more good at, for me with real estate, I knew that, hey, as a kid, I loved playing with Legos and, building things and stuff like that. That's why real estate development was right up my alley, because that's, I was reflecting on it and I'm like, from a early age, I was already drawn to it. So now let's put some gasoline on top of the fire and see what happens, right?
Mm-hmm.
So having self-awareness. And number 2 would be just being careful and selective with who you take advice from. Because a lot of people, as I said, they will just look up at a social media influencer who's posting screenshots or talking about a lifestyle with Lamborghinis, and then they
rent.
Yeah,
they tarot it for the day.
So understanding that, and then also giving something a solid 2 to 3 years to work, because it's like, let's say with trading, it took me 18, 19 months to just get to a point where I felt relatively comfortable, right? Which a lot of people don't talk about. They try trading for 3-4 months, they lose money, they quit, they start something else. They try that for 3-4 months, they quit, they try something else, and they never end up finding that level. But you got to realize, education takes time, growth takes time, and college is 4 years, right? So if you're not going to go to college for 4 years, right, why are you only going to give trading or marketing or whatever 2 months?
Yeah.
Give it a solid 2 years and then make up a decision whether it's working for you or not. A lot of people jump ship too fast. Right?
Oh yeah.
And I love that you said that, and that's kind of what I was asking you when you had made that decision to drop out, because sometimes people jump the gun way too quickly. And so it's nice that you were hey, it actually took me 18 months to really find my footing. Yeah. And then I felt comfortable and confident to be okay, I can do this.
Yeah.
So, and I know that you don't plan more than 6 months in advance, but what, I guess, if you want to do lifelong dreams, or what's next for Simon Lerner?
There's a lot. I mean, I definitely want to build a software business in the short-term rental space. That I don't have all the stepping stones yet. That's just, again, more of a future out vision than something I'm actively working towards. But that's something that, I'm visualizing that someday I may be working towards that.
And
maybe in 6 months I would start doing something like that. So, on a software side of that, and then also on the raising capital side, because right now the majority of the deals I do and business I do is with my own money and funds.
Yeah.
Because I'm like, let me learn all the mistakes and all the lessons with my own money. Because if I take someone else's money right now and I lose it, that hurts my reputation. But if I can figure everything out with my own money and have a track record, then when I go to, let's say, Thomas or go to Bill Gates or whoever I go to and say, hey, give me $5 million, I want to invest it into these deals, they're going to be like, okay, show me what you've done before. I'll have, all the stuff that I've done, all the mistakes I've made, all the money I've made, and a track record to show them, and not just be another person that comes to them knocking on their door, being like, give me some money, but has nothing to show for it.
For sure, yeah.
Right?
Yeah.
So, but what is crazy? It's that you are 23 and you're very patient.
Yeah.
Most of the people, they will be like I teach maybe I don't know, over 40,000 people. So what you said about they start 1 week, 2 months, and then they drop out. I know that. And there is this thing that you need to have to be an expert. You need to have at least 10,000 hours. Yeah, exactly. And people, they don't understand that. And also you need to love what you're doing.
Oh, yeah.
And
10,000 hours is at least 5 years of just hard work.
Mm-hmm.
Yeah, exactly. And people, they what I always tell them is when you first try to walk, you fell, and then you cool, and then you run. But it's some people, I don't understand why. I mean, I understand it's because of the social media and people showing Rolexes, Lamborghinis, as we say, houses that they don't own, and be like, it's my lifestyle.
The thing is, it's also just a stepping stone. You're not going to do math. You're not going to do calculus before you know how to do addition, subtraction, or then algebra, or then geometry. A lot of people are like, oh, I want to be an expert at calculus. I'm like, do you know pre-calculus? Geometry, trigonometry, algebra. All those things that are your foundation.
It's like a video game. Right? It's like level 1, 2, 3, 4, and you have to go. And having this maturity at your age, are you having coaches, coaches, sorry. And are you going to masterminds frequently?
Not as frequently as I used to. I used to much more when I needed to build up my foundation.
Yeah.
But right now, I'm, again, very selective with the inputs I put in me. So lately it's just been focused on building by myself. And when I'm getting to a level where I don't know something or I have challenges, then I seek out mentorship of people who can solve that exact particular issue. So for me, I work differently than a lot of people. I typically work in a 3 to 4 month building stage where I'm focusing on growth, whether it's getting more clients, making more money, getting more properties, and then I focus on a 3 to 4 month maintenance period of I've built everything. Let me now focus on maintaining it. I don't want to grow anymore. I want to make sure that I have systems in place. I have everything documented. Everything is set up correctly, because a lot of people, they try to just grow like this, but then they fall on their face like that as well.
Of course, yeah.
Right. And if someone, you were talking about getting that mentorship and stuff, how would you recommend someone goes about finding people who are kind of vetted experts in that field rather than the flashy social media type people?
Well, data doesn't lie. So Lamborghinis and rented condos and private jets and all that, those things lie. For trading, for example, a P&L sheet does not lie. So asking somebody, hey, you're selling a trading course, can you show me your trading P&L? How much money you're up for the year?
Can you ask someone that?
Yeah.
It's not much of why are you asking?
A lot of people. Well, listen, if you want to keep it private, don't go publicly talking about how you're going to help somebody make money with trading. But if you're advertising to me that you're going to help me make money with trading, it's show me some proof, show me some results. That goes across all industries. But also the other biggest thing is have some value to bring to the table. Because if you want somebody to provide you with mentorship or advice or spend their time to work with you, they're not just going to do it for free, especially somebody who's higher level than you and whatever it is you're trying to learn. They have all the value, so you need to come in and bring equal or more value to them, whether that's with your skills or oftentimes it's paying for their time, because oftentimes, I'd go to somebody and I have no expertise or no way to add value to that person, so I'll just pay for an hour of their time. It might be expensive, but for me, it might be very well worth it to go to somebody who I respect. Let's say when I go to start building a software for short-term rentals, I know nothing about software. An amateur would just go and be like, hey, can you jump on a call with me for an hour? I want to pick your brain.
Yeah.
And then the person would be like, well, what's in it for me? Why would I spend an hour of my time? This guy just wants to extract stuff from me. I'm not going to get anything from it.
For sure.
And I have other things I could do. I could spend my time with my family. I could travel. I could, spend that hour to make, $10,000. Why would I hop on a call with this guy? Right. I brought no value to the table. Or if I go in and, hey, I'll pay you $2,000 for an hour of your time, then it kind of levels the playing field a little bit. People might say, oh, I don't have $2,000 to spend to learn from somebody. Well, then find a way to add value in a different way, right? Introduce them to somebody, offer a service for free. Hey, I'll come, shoot content for you for free for a weekend and help you make short-term content for TikTok and YouTube. And I just want to observe the people you meet and the conversations behind the scenes and just want to learn.
Yeah.
So there's ways to add value. You just have to be creative with it.
Yeah, that's what I did. When I started 6 years ago, I was working for one guy that was saying online business courses, and I was doing all his content on YouTube, Instagram for free. But I was jumping on calls with him in his team, so I learned a lot. And yeah, you're right. You can always be creative and bring something to the table. It's not about just the money or your skills. Yeah. You are a human. You can bring something as long as you use your brain.
Well, even sometimes it's a person in your network. Hey, I've been really wanting to meet this person. Right. Hey, I know them. Let me make an introduction for you. So
it's either that or just finding a way to solve the problem for them, because everybody has a gazillion and one problems. So just identifying that.
And so, last question, but not least, do you have a favorite book or a piece of content that really changed your life?
I read a lot. I consume a lot of content, both for pleasure, just scrolling, and also for education.
Yeah,
it depends on what subject, because there is different content for different needs. Some content is for learning a tactic for business. Some is more personal development. For example, lately I've been reading a lot of Naval. Naval is a Silicon Valley tech investor. His book. I think it's the Almanac of Naval.
Yeah, I have on my list.
Was a very good book that I read lately. He was talking about using different types of leverage, which open up a new perspective for me. So for example, he was talking about how there's 4 different types of leverage you can deploy to scale something, whether it's a business, a company, whatever it may be. And 2 of the leverages are permissionless leverage, and 2 of them are permission leverage. So permissionless leverage means that nobody has to give you permission to deploy it.
Yeah.
So for example, content, what we're doing right now, and code, right?
Yeah.
So nobody has to give you permission to film, 10 reels, 100 reels, 2,000 reels and post them, right? Same with code. Nobody has to give you permission to write code and have it working for you and doing automation behind the scenes, for example. And then on the permission side, it's capital and people. So somebody has to give you permission to manage their money, right? And to give you funds to deploy into something.
Yeah.
Right. So if you go to a bank, say, hey, I need $1 million for this project, you need bank's permission to get that money. Same with people. If you're hiring employees, you need their permission to lead them. Right. So it's understanding those, and then also understanding in which order to deploy them. First, you need to understand that. So I didn't even know that was a thing. And then applying logic to see which one would make most sense to deploy at which time. So for example, if you have no leverage with content, with people, or with money, why would you start doing something with code? Because to build code, you need people, you need money, and then to market it, you need content and exposure, right?
Yeah.
But if you look at all big companies, they deploy all 4 to some degree. So let's look at Meta, Facebook, for example. They have tens of thousands of people working for them. So that's people. They have hundreds of billions of dollars available to them with their stock. They can just sell stock or borrow against it. They have a lot of code running behind the scenes that makes the whole thing automatic. You don't have to talk to a person to set up an ad. You just click a bunch of buttons and the computer determines who to show it to and how much to charge you and all of that, right? And then content. The whole thing is a media business, so
the content is produced by someone else. That's way better.
Exactly, right? So just understanding those and dissecting it, and then being like, oh, how can I apply this in my life, in my business? Which lever should I pull on right now? Should I hire? Look into hiring more people. How do I go about raising money? Oh, I don't have the experience in that. Well, let me start with content because it's cheap. Nobody has to give me any permission to do it. It's just volume. You keep recording content, posting it, getting more views, and then that can yield more money, more opportunities, opens more doors, right? So learning about that has been interesting for sure.
All right. Well, thank you so much. That was amazing.
Absolutely. Well, thank you for having me, guys.
Thanks.
Comment down below if you want to follow up episode number 2 in the near future.
Yeah. If you guys have any questions, drop them down. Simon, I'm sure, I hope you'd want to do a part 2 if there's enough questions.
Yeah, there was a lot of things we can cover up in the part 2.
Yeah, for sure. So many things.
Yeah, well, thanks for having me, guys.
Thank you so much.
Thank you for doing this with us. We really appreciate it.